Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend Matt, the mortgage guy. How you doing, buddy?
I'm doing good, Mike. How you doing?
I'm doing well. So this morning at bright and early, 7:15 or something, I recorded a Zoom call about the August disaster. What I want to do now is I actually have their press release up. I have not read it. You and I are going to go through it. Feel free to stop me anywhere you would like. As two people have been in the game a long time, I think there's a lot of data that they're likely to have. But again, I've already looked at the summary, the 9 slides. I've shared that. Now we're going to look at the press release together. You ready?
Let's do it.
All right. So again, this is found on the NAR website, National Association of Realtors. Can you see that?
I sure can.
All right. So we will just get into this. So again, existing home sales slipped 0.4% in August is kind of how they've led the headline. Their key headlines or key highlights. Again, I have not read this. I'm going through this the first time together. Existing home sales decreased for the 7th straight month. This is the transaction crash in full force, now at a rate of 4.8. I think sometime between now and March, we're going to get sub 4 million. It's going to be crazy. We are down 19.9%. I would argue that's a crash. Anything over 20% is a crash. Existing home prices still positive. The median home price was up 7.7% year on year. But wow, look at that number. And again, as I've admitted several times today, I had expected this to show a bump to 405. It came in at 389. That's a $16,000 miss. I was wrong.
What did median home price peak at? I'm curious.
416.
416.
Yeah, 416 and change. After 5 successive months of increases, the inventory of existing homes sold. I nailed this, and actually, I didn't talk about this yet. This is awesome. This makes me feel better. I got this wrong, but this makes me feel better.
You made some shots.
Yeah, I did. I made a layup. But again, I think this is going to surprise a lot of people, folks. Inventory is going to go down. We have seen record demand destruction. We are on the cusp. Phase 2 housing crash, Matt, is supply destruction. We are seeing it already, and it's going to get worse. Inventory was down in August already, and it's only going to get worse. This is pretty crazy. What do you think?
Yeah, I mean, I think you're right, and it makes for just such an interesting housing market. Because anybody who talks about mass foreclosures and stuff flooding the market and 20-30% decrease in prices, like it's almost impossible to see that when there's nothing for sale.
Yeah,
I know that demand has fallen off a cliff, and I know that much fewer people can afford to buy. Those that can afford to buy might choose not to buy because of interest rates and affordability and that. But when there's record low homes for sale and no sign of anybody selling, like I talk to people every day that once they go through a few little scenarios, because the average person doesn't really know. They just say, oh, my payment's $1,900 and my house is worth $500,000. If I bought something for $800, it can't be that much more.
Oh, watch out.
Well, sure can. Your
payment sure can
double. And those people just sit. Like, what's going to cause those people to move? It's going to have to be a life event. The transactions that are happening.
No, it's going to be 2 or 3 life events. The first one won't make a move. It'll be the second or the third.
Right. Yeah.
Go ahead.
Go ahead. No, go ahead.
I was going to say, this was interesting. Again, this wasn't in the summary. At least I didn't see it. Month-on-month sales varied across all 4 major regions. 2 regions recorded increases. 1 was unchanged, and the other posted a drop. I'm sure it'll be listed below.
I was going to say, like, don't keep us in suspense. Tell us what regions did what.
I'm guessing it's the West, but we shall see.
Yeah, me too.
On a year-over-year basis, everything fell. Okay. Transactions 4.8, again, down from 5.9. They were down 20%. That is the housing crash that I've been talking about. The housing sector is most sensitive to interest rates. Lawrence Yun out there being a cheerleader again. He's been the chief economist for quite a while. This is bad. Well, it's good and bad. This is cool that I got it. It is down 1.5% from July. Folks, supply in September, it could be pretty bad. It's funny, supply went down, but because demand went down more, months of supply actually went up. That's weird. That doesn't usually happen.
Yeah. You know what's funny too is like I wish they would in this same sentence
Mhm.
talk about active inventory.
Yeah.
Because 1.28 total housing inventory counts everything that's in contract. You can't go
Yeah,
buy that house.
Yeah, it's pending. It includes pending. Yeah.
Right. So what is active, you think? Like 700?
I'd say sub 700, but probably not sub 6. Probably
Yeah.
sub 7. Yeah, I don't know. That was a wild guess.
Mhm.
Inventory is going to remain tight. Look at this. This is what I've been talking about. Some owners willing to trade up or trade down after locking in. This is supply destruction. This is phase 2 of the housing crash. Yep.
Yeah. And
Supply
you know what's an
destruction.
interesting thing? A little caveat to this,
Mhm.
since we're talking about like motivation to sell.
Mhm.
I've got a call today at 3:00. Great client who flips a lot of homes
Mhm.
and listed a home for sale, got it in contract. It fell out, came back on the market, called me and said, you know what? I might just hold on to this one.
Yeah, there's a lot of flippers I know that are gonna just hold. Yeah.
Yeah, cash flow.
Yeah.
When people can afford to pay my number because rates are lower, like whether that's 12 months from now or 48 months from now, like they'll just
Yeah, I'll sit on it.
hold it.
I'll slow down. Yeah. So 126 months or over 10 years, 10 and a half years of price increases. It's the longest in history. Again, you asked about the peak. Here it is, 413, 800. Days on market. This is something I was hoping was going to explode. It will eventually explode. It's coming. It'll come this year. But days on market went up only 2 days. I was hoping we'd get to 21. That was a hope. 16.
Yeah, you got to give it a few months.
Yeah, I'm just
Big old ship to turn.
Yeah. 81% of homes sold in August were on the market less than a month. That won't continue.
Yeah, I mean it's interesting too to see
First time home buyers. Look at that, 29%. Let's call it 30% just for round numbers. They're still there. FHA, VA, first time home buyers. All cash, still 24%. I always wonder about this all cash. Is it really cash or is it like non-QM loans or hard money or?
Yeah, I mean, I think hard money counts as cash.
Okay.
And like the numbers for my market are in the teens and always have been. So 24% just seems like a lot. Like, I don't know, is there $9,000 houses being sold in Detroit and
I don't know.
Other markets that pull this number up?
And individual investors and homeowners, so this would be homes with tax returns or bills going to a different address, 16%. Foreclosures and distress sale, nothing, still 1%. Average interest rate for August was 5.25, or yeah, basically 5.25. It was actually down. This is why I thought median would be up. There'd be this like rush of people trying to lock in, but didn't happen. I was wrong.
Yeah, I mean the August locks might be September sales.
Yeah, I was thinking July locks, August sales, but we'll see. Market trends, largest year-over-year median list price growth, Miami, 33%, Memphis, 25%, Milwaukee. Phoenix had the largest number of price drops at 30, Austin, 24, Vegas, 24. So you can see some bubble markets coming in.
The hottest ones are going to have the coldest winters.
Yes, you're right. So single families decreased. Okay, we talked about that. Condos. Oh, they were up. Yeah, condos. Nothing. Let's see the regional breakdown. That's what I was waiting for. Here we go. So existing home sales in the Northeast grew 1.6% from July. So that was one of the ones that was up, but down 13% from August of last year. That makes sense to me. Median home price 413. It increased 1.5%. So again, Northeast went up. Midwest fell 3.3% for the month, retreating 16% year on year. Median home price 287, up 6.6%. At an annual rate of 2.3 in August, existing home sales in the South were identical to July, but down 19.3% from a year ago. Median price was up 12.4%. Woo, that's above the average. And then the West, existing home sales expanded 1.1% in the West compared to last month, down 30%. Woo!
from this
Calif-
time last year. Wow.
California, Vegas, Arizona. Yucky, yucky, yucky.
Yeah. Boise, Idaho.
Yeah, Boise. Median home price was up 7%. So again, different markets, different things. So that is the full report. Kind of any takeaways or thought on this? Because again, I forget what cash transactions were. Let's call it 30%. So 70% of those purchases had loans. So any thoughts on that? First time home buyers were standing up. I thought that was interesting.
Right. Yeah. Which they're still buying. And I think that, conversations I've had, the move up market is really in trouble.
Dead, as I've called it repeatedly. Dead.
Dude, I mean, I've got agents calling me where they're like, if this seller really wants this sold, I'm going to have to go from 1.6 to 1.2. And even then, I don't know if this thing will sell.
Yeah.
And, the sellers, like we've said for the last few months, are stuck in January and February thinking and pricing. And I have a little bit of empathy for some that kind of made plans around, I'm going to downsize. Here's where I'm at. I'm going to be able to get 1.6 for that, pay off that loan. I'll pay off, whatever the case may be. Like, they didn't realize things would move as fast as they did. Where I'm excited though, is that I get to play on the buy side. And, so a lot of this stuff is exciting. I was thinking about this morning, I had this random thought around home buyer sentiment right now. You should be, if you're an investor or a home buyer, excited.
Yeah, you've been beat up for the last 2 years. Now it's time to go get yours.
And if you were a stock investor, you wouldn't want to read daily headlines of how Tesla's up another 6% if you're planning on buying that Tesla, because it's going to be more expensive. If Tesla's crumbling and you love Tesla and think that Tesla's going to do great over the next decade, you want it to continue to fall, right?
Yeah,
and with housing,
you want to get a deal. Yeah,
I would think you'd want the same thing. Like, with my investor hat on, I'm like, bring it on. Max
time to
pain,
go shopping.
max blood, max urgency on the list and sell side.
Yeah.
And let's go out and find some great deals. Like I told you offline, there's a bunch of ORAP folks that are out there hunting for deals, researching their markets, talking to sellers and putting creative stuff together. It's go time.
Yeah, I totally agree. Do me a favor. Somebody wanted, because again, investors, first-time homeowners, go again. I will say it again. We don't pay list price. We get closing costs paid by the seller. We get rate buy downs. I'm not changing my opinion. Go for the neck. Go get your good deal. Matt, where can people find you?
Go to greatmortgagebroker.com, fill out the form, let us know where you're at, how we can help. You want to get yourself pre-approved. If there's any chance of buying, there's no reason to be out there shopping, looking, analyzing, crunching numbers. And then when it comes time to buy, then you go, oh, I didn't realize that because I went from W-2 to 1099, I can't qualify. You don't want to scramble to find a cosigner and qualify. Know that you qualify first. Know that qualifying is free.
Yeah.
I pay the credit report. The team puts that, hour and a half or 2 hours into scrubbing it, making sure that everything aligns. And then once you have the golden ticket of a $500,000 pre-approval or whatever it is, you go out and shop. If you don't buy anything, we're not going to send you a bill.
No.
But have that stuff lined up first, because we're in a market where you can structure the financing in a multitude of different ways, with price, with concessions to buy down the rate, and all that other stuff. So you no longer have to just go out there and be part of a frenzy where you offer any price and don't get to inspect it all. Now you get to inspect, you get to have an appraisal, you get to negotiate price, you get to negotiate credit. It's fun to be a buyer right now.
Exactly. Again, greatmortgagebroker.com. Check it out. Do your work early. Know what you can buy, what you qualify for, and go shopping. No list price. Get closing costs. Get rate buy down. Please, please, please. Only great deals, folks. Only great deals. Thanks, buddy.
Thanks, Mike.